Hey guys, can you guys hear me? You can't. Again. Oh, all right, whatever. Bad joke. Yeah. Whatever. Well, most of the time they can't hear me. So let's see if I even know how to use this. The hell? Hold on. Okay, let's see. We'll do some giveaways too. Yes, I'm here. I'm going to wait a couple of minutes for people to hop on so I can go over the futures trading. All right. Can you guys hear me on X? Do some, ooh, looks like we're kind of falling a little. Yes, I'll be doing giveaways. I'll do basically a little trivia at the end. And I'll mix it with I'll mix it with like a 30-day free trial at TWL. You don't have to even no credit card or anything like that to sign up. And then I'll do some account giveaways. Let's see. Okay. I'm just waiting for others to hop on. And those are the trade options. I think you guys are going to find this very interesting. I would say about 90% of people that have traded options and came over to futures, they have never went back to options. Trying to see how I can. It's the first time I'm using this Restreamer, or yeah, whatever it's called, Restream. So I'm just trying to figure it out, to be quite honest. Oh, there, I see some of you. Okay, okay. Thank you. Just grab something quickly and I'll get started. So I'll go over everything you need to know, how to trade it, how to trade with your own capital, how to trade with prop firms, all of that. Because I think adding futures trading is very, to your skill set is very vital, especially, times are changing. So, okay, everybody ready to go? Hop on the short bus. Okay. All right, let's start. Also, I will answer any and all questions at the end. No question is a dumb question because we've all been here. When we started, when I got started trading futures over 3.5 years ago, I came from trading options. And before options, I traded small caps and all that kind of stuff. So I didn't really have anyone to explain this stuff to me, and it was a lot of trial and error. And to be quite honest, I lost a lot of money doing trial and error, and I wish I had someone to, um, kind of help me with that. Yes, there's a lot of information on the internet, especially nowadays. But back when I got started, it was not a there was barely any like prop firms, and I think Top Step was one of them, and but it was not as big as it is right now. And I've been teaching these webinars for the past 3 years. I've started amping up teaching them more because I see a lot of people are struggling, and a lot of people struggle because they are, they'll buy an account or whatever it is. They'll just jump in, try to trade it without really realizing or following the rules and how it works and things like that. So save yourself some time and money and things like that. Okay. Alrighty. Whoops. Where is it? Okay, so Futures 101. All right, so what are futures? So futures trading basically is a contract between a buyer looking to invest and a seller where the contract is made for the future and has an expiration date. Now, how to trade them? So there are two participants, okay, in futures trading. Basically, hedgers and speculators. So hedgers protect their assets from risks, and speculators are usually floor traders. So as retail traders, we are considered speculators. Now, futures contracts are available on 5 different assets, such as the equity index futures, interest rate futures, commodity futures, currency futures, metal futures, and they all have expiration dates. NinjaTrader and Trade-O-Eight or Interactive Broker or TradingView, whatever you're using as your broker, they will automatically prompt you to roll over. So as you can see in this example, it just kind of says like auto rollover notification, current expiry, new expiry, and that's about it. So you just click OK, and that's all. So equity index futures, they typically expire on a third Friday of every third month. So that means that E-mini or S&P 500 expires quarterly, which is March, June, September, and December. NASDAQ, same thing. March, June, September, December. Now, if you're trading interest rates, or if you're trading commodity like oil or gold, those expire monthly. So basically, you're going to get a same thing, auto rollover notification. It expires monthly, and that's it. So basically, the purpose of this is to, to teach some of the fundamentals of how futures work, how you can trade them on your own account, and how you can get, a funded futures account that I believe, many would um, benefit from adding this to their trading skill set. So some of the key terminologies that we use in futures trading, you're probably going to hear a lot more the first few compared to you don't really hear a whole lot about these down here. But basically, lot or contract is unit of the instrument. Okay, so if I say I'm trading 5 NQs, that just basically means 5 lots or 5 contracts of it. Tick is the smallest price movement that a futures contract can make. Okay, and point is a $1 move or $1 or one handle. Globex is basically an electronic trading platform that's used for derivative futures and commodity contracts. However, traders also use the term Globex to mean the overnight session of the market. And so if someone's trading at night, let's say at 2 in the morning, they're going to say, oh, I traded Globex. And then regular trading hours for specific exchange or market center typically during the New York session open. Contract month is the month in which a futures contract expires. Margin is the amount of money required to be deposited by a trader to open a futures position. Settlement price is obviously the price at which futures contracts settle at the end of the trading day. It's pretty self-explanatory. You guys can find this. I posted a link to it. So most first off, the market is essentially futures. So we frequently discuss ES. The S&P 500 futures are those. Okay, so although these futures are traded similarly to other derivatives, leverage is what they offer above all else. So futures trading is simply a very leveraged form of stock trading. It's not like options. There's no theta, there's no IV, there's no Greeks, okay? So your contract doesn't decay just because of a bunch of different variables. So the contrast, with futures, an E-mini S&P 500 futures contract offers 32 to 1 leverage. So because ES trades in ticks, aka a 0.25 spread, one contract changes value by $12.50 for every 0.25 it moves. So you gain or lose $50 when ES moves 1 point, for example. So if ES changes by 10 points, you either win or lose $500. And then a tenth of an ES is this little one where it says MES. It's a micro. It moves in $1.25 per tick. So instead of $50 per point, it is $5 for each point on MES. So it's simply a tenth of the same stuff. So to kind of give you a little bit of a, if let me go to crude oil to show you just the contrast of different, indexes and assets. When I first started trading, I traded oil one night and I was down $80, and I'm like, how am I down $80? It hasn't really even moved. Well, I didn't do my due diligence and research or study that oil moves in the tick size of oil is 1 penny. So for each penny, it's $10. And it was only like down by 8 cents. So for $1 or for 1 point move, it's $1,000 on oil. So if oil is trading at $60 and it goes to $61, so you just made $1 move, one contract is $1,000. So if you look at NASDAQ or NQ, each tick is $5, or which is quarters. So every quarter that it moves, it's $5, or $20 in one point. Okay, so this here is kind of like a little cheat sheet that tells you how the minimum tick, the tick size, how it moves, and the dollar amount. So to kind of go through that. Futures market is open 23 hours a day. You must close out your positions by 4:59 p.m. Eastern if you're trading on a funded, like prop account, or if you're trading on a day margin. And typically, and it opens Sunday at 6 p.m. Eastern, closes Friday at 4:59 p.m. Eastern. Also, it does not follow the schedule or the holiday schedule as the New York Stock Exchange. So, for example, for Labor Day, New York Stock Exchange was closed, where futures were open until, from that Sunday night, 6 p.m. until 1 p.m. the following day. So just know that the holidays aren't always the same. And the best time to trade are during the New York session market open, or during European markets, which is in the middle of the night. So, like I said, just check with the, during the holidays, as the hours may vary. So basically, there are different ways of getting funding. And I'm going to start with funding your own account, or your account with your own capital. So one way is to, if you're using traditional brokers like Interactive Broker, TOS, whatever broker that you're using, you'd probably have to apply for trading futures, and you need to get approved. But you can trade micros, so which roughly cost, so for an MES lot, which is that micro version of S&P 500, it is about $2,347. Okay, for one contract. For one full ES, or initial balance, it is $23,000. Again, this could change. This is just kind of what I'm giving you as of when I had the slide written. Or you can, you'd want to check with your broker on how much capital you would need for that. Or you can use, second way is to use a broker that specializes in futures, such as NinjaTrader or Tradeovate, AMT, Webull is another one. You want to check to see what their margin requirements are, because they're all different. So instead of the $23,000 for traditional brokers, Tradeovate offers a $500 to $1,000 day trading margin for E-mini contracts. And micro contracts are even more affordable, because MES costs only about $50 for day trading, and MNQ costs $100. So this is for the day trade margin only. And I'll explain what overnight positions require for initial margin. But ES is about $500 a day for the day trade, and $23,000 for the initial. NQ is about $1,000 a day, or $33,000 for initial. One way you can also do, I use NinjaTrader and Tradeovate because I can fund my own money in one account and use the other account, and kind of vice versa. So I can integrate my Tradeovate accounts into my NinjaTrader and just copy and trade them all together at the same time. So the distinction is that when you purchase or sell a contract, you're not purchasing ES shares. So therefore, it costs the same amount of money to buy or sell one contract, regardless of the price at which ES is trading. And margin is the term for this. So TOS and IBKR, like I said, they needed like $23K for a single ES contract. However, one contract is what you receive, for that. But for a broker that specializes in futures, it's actually fairly affordable, making this a good choice for those who feel comfortable trading their own money. Also, margins do change based upon a news event. Okay, so you would want to check your broker on the margin specifications. So here's a little bit of a difference with what does day margin mean and initial margin. So for example, for ES, like I said, one contract for the day margin is $500. But if you are wanting, if you're a swing trader and you want to swing your position, let's say over the weekend, then you would need to use this box where it says initial margin. Okay. If you are more of a day trader or a scalper, you can use the day trade margin. Whoops. And so for me as a scalper or as a day trader, I use day margin because reduced intraday margins are available from 6 p.m. Eastern until the following day, 4:45 p.m. Eastern. So almost 23 hours. So technically, I can actually hold a position from 6 p.m. Eastern until 4:45 p.m. Eastern the next day. But if I want to hold my position between this 4:45 p.m. Eastern until 6 p.m. Eastern, so that hour and 15 minutes, then I have to have this for each contract. So if let's say I want to use, I don't know, 10 NQs, I would have to, my initial margin would be like $330,000 just for, for that. But I don't, I don't swing over that hour and a half. I can exit my position, before 4:45, re-enter at 6 p.m. It does not have to be, I could play with more size if I wanted to. And if you're playing with the micro version, it's $50 for a contract. So there's no PDT, so you can get in and get out as many times as you want on these contracts. So sure, there's going to be times where, you wish you swung something like this past Friday. I know Rizzo, who's an analyst in my server, he swung positions from Friday until Monday morning. And, he caught that gap up, right? So, but same thing can happen. What if you swung and it went the other way? Again, it's just a matter of preference, and so that you know the difference between the two. And third way of trading futures is trading with a prop firm. Now, I know you guys have seen this probably all over social media, and you see people posting things and this and that. And I'm going to kind of explain how this works. Okay, so basically, you utilize a finance partner, also known as either Tradeify or Apex, Take Profit Trader, the Futures Desk, Top Step, or My Funded Futures. There are many others. There's like 80 different firms. I have narrowed down like 20 some firms that I feel comfortable using. And more specifically, I actually even have a smaller list of that are more reputable firms. But how it works is you demonstrate to the prop firm that you're a successful trader. You must pay a fee to enter the evaluation, which is basically a sim account. Okay, so if you succeed, you will then be given a funded account to trade with. You pay the activation fee. Now, you want to know some prop firms don't even have an activation fee, so it just depends on accounts and prop firms. Other firms also have where you can skip the, what is it called? The evaluation or the testing and go direct to sim funding or straight to sim funding, instant, just depends what they call it. But you keep all of the proceeds up to 25,000. I'm just going to use Apex as an example for this. And you keep 90% of the profit after the first 25,000 you earn, while they keep 10%. So you want to see the prop firm rules of whatever firm that you're trading with and you're utilizing. So you want to do your due diligence, go through, different firms and see what their rules are, what fits with you, because they're all unique in their own way. Okay. Now, some people will get multiple accounts when they run a big discount, so they can trade them at the same time because there is a trade copier. It's one click, it multiplies it into all of your accounts, and but each account must pass the performance evaluation because they're all standalone accounts. So is this too good to be true? Not really. Most traders fail due to lack of discipline. Okay. I don't care if you're trading options, if you're trading crypto, equities, whatever it is, futures, with your own money, with your grandma's money, I don't care. 95% of traders fail, and it's due to lack of discipline and due to lack of risk management. We have all been in situations where we've, over leveraged or, you know, weren't disciplined or whatever it is. However, this is how these companies make money. Actually, that's how the market makes money. Is if you somebody's got to be a loser, right? If you do not, you know, uh, if you are able to trade the chart and such as price action, stay disciplined and consistent, then you will make money. If you know how to chart SPY or QQQ, it's basically the same thing. So ES or S&P 500 is just like trading SPY, or if you're trading Nasdaq NQ, it's like QQQ. So it's the same movement. So if you're using Fibonacci's, if you're using moving averages, whatever you're using for charting, that's what you would use trading futures. Actually, a lot of people will chart on QQQ and execute on, Nasdaq or NQ, depending upon if they want to go long or short. So if they're thinking of buying, I don't know, calls, they'll just go long on NQ or vice versa. But so basically, if you're disciplined and consistent, then you will make money. There are other restrictions placed on how you can trade the funds, but it makes you become more of a consistent trader. Okay. Now, the worst that can happen is you lose your seed capital evaluation fee. You don't pay back any capital. And you can also take the evaluations as many times. It's not just once and that's it. In addition, if when you are in an evaluation, you don't get to keep that money, because I do get questions from people. When you're in the testing phase or the evaluation phase, you don't get to keep anything in there. If you get an account that's already like straight to funded, then the money in there you get to keep. So it just depends on the account. Also, you can trade your own funded account. So if you have a personal account, you sign up, or sorry, if you sign up with a personal account and you fund it, you can connect all of them together and trade it if you're using like NinjaTrader or I believe Sierra Chart. Or, I'm not 100% sure, but I know like with NinjaTrader, you can link up all of these accounts. So I use NinjaTrader and TradeAway. So in my opinion, if you just want to test it out, either you can just go to like tradeaway.com or ninjatrader.com. And I think that they've got like free demo accounts. Try it there. Or, get a prop firm account, which is, it's a small challenge fee. It depends on which firm. But I'll go over that as well. So why prop firm versus trading your own money? And this here is from Take Profit Trader. And basically, all technologies and account setup are done by them. Okay. So there's no documentation and painful account setup experiences. Simply put, most traders are undercapitalized, and you level the playing field by using their accounts, not your own funds. And trading your own funds can lead to severe losses. However, with a prop firm, your losses are limited to your associated challenge fees. Also, lack of discipline haunts traders, and the risk management system and rules will make sure that you stay disciplined during your trades. So And you also get live market data and all of that included with your accounts. But here I'm going to kind of talk about, actually, you know what? Let me pull, I'm going to actually pull this down so you guys can see. This here's from Apex. Many of them are very similar. And as far as like the goals to, pass. Okay, so for example, it's a 50K account and your trailing threshold is $2,500, which means you cannot go below $2,500, and your profit goal is $3,000. So right now Apex has a deal where it's a 1-day pass. So if let's say you get a 50K account, you meet the profit goal of $3,000, you have passed the account. Okay. So tonight let's say you do that today, you should not, let me back up. You should not try to make this, money in 1 day. It can take you 10 days. It can take you 20 days, and that's okay. Don't try to rush it. But the point is that you can also do it in 1 day. So to clear that up. So let's say today you met $3,000. Tonight you're going to get an email saying, hey, you passed your evaluation. Here's your account to trade. So whatever you make, as long as you follow the rules, you get to keep in there. So they have what's called an intraday trailing. Whereas if you go with, let me pull up. Tradeify. If you, so this right here is where it says straight to sim funded. And these accounts here are basically you skip the evaluation. There is no evaluation. They've got drawdown mode, end of day, trailing max, drawdown is 2,500. Also, this is the prices here are without any codes. So if you use like a code, there's a discount. Okay. But they also have where it says advanced and growth, which means that you can also choose the evaluation and take the evaluation there. They have intraday trailing and end of day trailing. Now these are important to distinguish what, and this is what people miss. Okay, so I'm gonna help you understand the drawdown types. So here we've got the intraday trailing, end of day trailing, and static drawdown. So basically, your drawdown limit moves up with your balance throughout the day, but resets to the daily starting balance each day. So what does that mean? So let's say you have a 50K account with, I don't know, $3,000 drawdown. So your day starts at 50,000, your drawdown is 47,000. Let's say at 10 a.m. you make $500 profit, your balance is now 50,500, your drawdown moves to 47,500. Okay, so see, it's following live. At 11 a.m., you make another $300, which is $50,800. Your drawdown moves to 47,800. So see how it's following that $3,000 on these moves? Now let's say at 2 p.m. you lose $400, which is 50,400. Your drawdown stays at 47,800. It does not go down. Okay. Next day, your account resets, you're up at 50,400. However, your drawdown is that 47,800, which is $3,000 from the highest balance. So even if you don't, so it's live trailing. So even if you don't realize the funds, it still follows you. This, I would say, intraday trailing is more for people that are faster in and out of trades, take base hits, don't want to, they don't hold a trade all day type of a thing. Basically, don't let your trade go up $1,000 and then watch it go back down $1,000 because, it actually has an impact for you. So The end of day trailing is a little bit different. And the way that works is your drawdown limit only moves up based on your ending balance at the close of each trading day. So 50K account with, $3,000 drawdown. Day one starts at 50,000. Your drawdown is 47,000. So let's say during the day you're up 51,500. And then you go down, you lose some money, you're down at 50,800. Your drawdown stays at $47,000 all day. It does not trail, it does not move because this was your drawdown yesterday. Now let's say day one close of 50,800. Your drawdown updates to 47,800. Your day two is going to start at 50,800, and then your drawdown is going to move to 47,800. So a lot of people like the end of day trailing, and some firms offer both intraday, end of day. Some firms offer static. So the static one, what that means is that your drawdown limit is fixed based on your starting account balance and it never changes. Your drawdown limit is fixed based on your starting account balance. So, for example, 50K account, your drawdown is $3,000. Your account starts at 50,000. Your drawdown is 47,000. Let's say week one you grow to 55,000. Your drawdown is going to stay at 47,000. Month one, your account grows to 60,000. Your drawdown stays at 47,000. Month six, your account is up at 75,000. Your drawdown is still at 47,000. However, if you lose $28,000, which is, if you go below that 47K, you can still breach and liquidate your account. So that's, the futures desk prop firm has probably the best static drawdown I've seen compared to any of the other prop firms. So that's something to kind of look at. Let's see here. These are just a few comparisons because a lot of these firms, they differ in payouts. So, for example, Take Profit Trader and the Futures Desk, once you pass, they have a daily withdrawals. So, when you are, for example, with the Futures Desk, there's no base hits or consistency rules once you're funded, and there's no minimum days for payouts. $100 minimum for to withdraw, and there's no maximum. So that's kind of like their payout rules. Their evaluation is customizable, which is between like 5 to 12 days if you want to take some time to pass. There's a base hit rule. There's no activation fee, and it's a one-step evaluation. They also have these static accounts that are full, like for example, Apex has a static account, but it's only $675. If you breach that $675, you're going to lose your account. But Futures Desk, for example, the account that I have, it's a $6,000 static account. So as you can see, there's a difference between, these, firms or whatever. Tradeify has, the different accounts, intraday trailing, end of day trailing, and they also have the straight to sim funded. So you can skip all of the evaluation and then just go straight. It's called Lightning. You get faster payouts and 90-day profit split. They approve their payouts really fast. Take Profit Trader also has a withdraw from day one. And 5 days to pass. And Apex right now has a one-step evaluation. Their accounts are probably the most inexpensive out of all of these. And their evaluation accounts, I should say. They also have a one-day pass. So, and you can also, this is the only firm that allows to trade up to 20 accounts simultaneously. So Here we can, hold on. If you are wanting to, weed out which one has end of day trailing, you can do that. Or just static, or just intraday, that kind of a thing. And trading resources, let me go back. Another thing, when you're comparing these firms, you can multi, let's just say we want to pick, I don't know, Tradeify, 50K. It's going to auto apply like the code. And then let's say we want to add TopStep, 50K. Same thing, end of day trailing. It's going to tell you there and tells you what the profit target is and what the drawdown amount is. So when you compare the two, Tradeify and TopStep, this one is best value compared to TopStep for the same type of an account, same size of an account. You can continue to add firms if you want, but it just kind of helps with weeding out what you are looking for. Another thing is for example, TopStep does have during the evaluation, they have a consistency rule, which is 50% or more. You have to be below 50% or less, I should say, to pass. So let's say you pick this $3,000 account, and I don't know, let's just say today you make $2,000. Overall profit, no. Okay, let's just kind of calculate this. So you would be over your, 50, even though, you made money, you would be over your profit. So if you make $1,500 today and $1,500 tomorrow, you're going to be at 50%, and that's passable. Or let's just say you made, I don't know, $700. Then you're under that 50%. You just need to continue to trade and make that profit. So that's kind of a, oopsies. Another thing I wanted to show you guys is risk setup, okay? So risk management calculator. Now this is just for educational purposes, guys, so you know how to, play with your accounts and size them properly. But I will tell you that 95% of the times the people fail their accounts is because of over leveraging. There's no, that's pretty much it. And so let's say you have, I don't know, let's just do the $3,000. No, because they're actually $2,000. So the way you want to enter your amount or account size is the drawdown limit. So if you get a 50K account, it's $2,000. If you get a 150K account, like Apex is $5,000, but like TopStep or Tradeify or other ones might be $4,500. So let's just do $2,000, okay? And, typically 2 to 5% per trade. 5% is kind of more aggressive, but you would only use it for high conviction setups, if you've got like a really strong edge. So I don't know, let's just say $5,800 to make this. Nope, I'm doing NQ. Let's do 24,900 and stop loss 24,910. Okay, so it's going to, you click here, it's going to help you calculate your position. So per trade, you're using 2 contracts, and you're risking, for example, $40. Okay, let's say you want to risk more. You can do 5 contracts. Again, you want to use it on your highest setups, but this is per trade. So if you're taking more trades, you don't want to risk more than 5% of the account. Now, if you go to 15%, it's going to tell you, hey, yeah, you can do 15 contracts of MNQ, but 5 losing trades, you're down more than 50%. 7 losing trades, your account is destroyed. Okay. What ends up happening is people will size in more than this, and they'll size in not with micros. They're going to go in with I don't know, 4 perhaps. Whoops, that's not even going to calculate it. Risk per trade. What the hell? .20. What am I doing wrong? Okay, so what they're going to do is go in with, a bigger. So even if you're risking 15%, that's only one contract. So technically, I see people all the time. They're going to DM me, message me like, oh, I blew my account. I'm like, well, what size an account? Oh, it was a 50K account, which is, $2,000. Well, what did you size in? Well, I used 5 NQs or I used 4 NQs. So technically they used up each, like you're going to blow your account in literally like 2 or 3 losses. So that's why it's important to know when you're trading this, to know what you're trading. I personally like to trade the higher account or the 150K account because I have more room for for a mistake, for so let's see. And that's, you just have more wiggle room if you're using a bigger account. Where's the trading journal growth calculator? And, and here you can also calculate, whatever your starting balance is. Let's say it's $2,000 and how much you're risking. So loss limit percent and your profit target percent matter. So your risk to reward ratio matters. Okay. If you are, if you risk $500 to make $1,000 per day, that's fine. Even if you're at 33% hit rate, you're going to at least break even. Okay. Anything above that would be profit. So this is why your profit targets must exceed risk. If you are risking, and I see people do it the other way around, they're going to risk $1,000 to make $500. That doesn't work. You would need, pretty much 100% hit rate to do that. But in here, you can calculate and see how many days and how it's going to, I don't know, let's just say $5,000. I'm going to risk, I don't know. Oops. One. No, not one. Let's just say, yeah, going to risk 1%. Or you can also do a dollar, dollar limit or whatever to make 2%. This is just, even with the 50%, even those little small, what is it called? Small profits daily, they add up. Okay. So, you're up 20%. If you are risking a little bit more, your profit target is a little bit more, or if your win rate is, I don't know, like mine, for example, is about 70%. So the stats change, but you just need to figure out what works for you, and the biggest thing is really to be successful is to have the sorry, not that. Where is the psychology? Is your risk setup, plan your trades, trade your plan, and that's how you're going to keep going. Otherwise, you're just going to be stuck in a little kind of like, is it hamsters that run in that little whatever wheel? If you don't have a plan. And another thing is journal, guys. You don't have to do Excel spreadsheets or anything like that. This is free. All of this here is free. You don't even need a credit card or anything like that. It's just there to import whatever to help you guys. And your growth calculator, just trade or track your stuff. Any business, I don't care if it's a small business, a bigger business, medium business, they have accountants. They have, if you don't have profit and losses tracking and things like that, then how are you going to become profitable if you don't know what to fix? So one thing though, while I'm here, I'm going to show you guys is this little mental state. And they say 90% is psychology in trading. That comes with your risk size. So if you're over leveraging, you're definitely going to be trading differently. But let's say you're just sizing in just fine, and you are, I don't know, you're in these little green things. Let's say you're a little anxious and greedy, vengeful. It's going to tell you consider not trading. Maybe you are, I don't know, confident, focused. It's gonna just kind of tell you proceed with caution. Do a little cognitive bias check. A lot of times people will have like the herd mentality. You're following the crowd without analysis. So I don't know, let's mark that. You can little, journal that. Well, you can also later on, it will kind of show you post trade. You can go through and you can see a pattern. If you're someone that goes in a tilt, you need to identify what triggers. And is it because you were green and or you took loss after a loss after a loss? You have to have those rules in place. After 2 losses, I'm not trading this account again, or trading at all, because it can spill over into your other trades. So that's kind of the gist of that. Let me go back to the slideshow, and so I can show you guys exactly how to execute this. Okay, so this here is called the Project X platform. This is where a lot of prop firms have their own. It might be called like TFDX or something, or Top Step X. That just means it basically looks like TradingView, and you just execute here. It's user friendly. It doesn't. I personally would not chart on it because I have not seen the accuracy as far as charting with it. But you can chart on TradingView, you can chart on NinjaTrader, you can chart on TOS, whatever you're charting on right now, you can chart this as well. This one here is called the NinjaTrader prop platform. So on the right side, I personally chart on NinjaTrader. I also use order flow footprint, which looks like this. You do not have to use that. I use it because it gives me an edge with what's going on within a candle, at my specific levels. So that's kind of a something you can't add to Project X platform, for example. Okay, and then this is Tradeovate platform, also fairly user friendly. If you're going long, you're going to buy market, buy bid. If you're going short, sell market, sell ask. One of the biggest things that I want you guys to understand is that I will say you have to have a hard stop loss. And the reason why I say that is because, no, of course you don't have to have it. The market's going to have it for you, because trading futures is more riskier than trading options. So you guys saw last Friday how quickly we moved. By the time you were going to close out your position, you would have been, a lot of people were liquidated if they were long. Okay, so that's if you don't have a hard stop loss. You can always move your stop, but as long as you have that protection, like the plunge team protection, so that you don't wreck your account. At the end of the day, you should always have a stop loss. And especially if you have mentality of like, oh, I'll just um, cut it myself. Well, it doesn't really work like that in futures. So by the time you do that, sometimes we'll have candles that will come through 20, 30 points, and in seconds and then go back. But that's okay. You can always re-enter. There's nothing bad about re-entering. So basically, the key takeaway is if you know how to chart just like you would SPY or QQQ, you know, you're going to be just fine. So while this might be considered easier than options, it is in respect due to no Greeks, no theta, no IV. However, most of us struggle with risk management or FOMO or mindset, and consistency is key. So, and also, the rules and everything if you're using a prop firm. So I pulled up a sim account. I'm going to execute some trades for you guys just to see how this works. So, okay, NQ. I'm actually going to make this bigger so you guys can see it. So right now it's, 24,900. Let's say what time frame is this? 15. Okay, it doesn't matter. But let's say I want to go, I actually always like to go short, but let me just change this quickly. See how it went down by almost 10 points by the time I just made this little adjustment? Each point is 20 bucks. Okay, so notice how it moves in 0.75. So it moves in quarters. And if I was sized in, I don't know, I'll size in one. It's a sim account, but I just so you guys can see. So notice how, I have a stop loss. I can move my stop loss. Just drag it, move it, whatever you want. Each point, whoopsies. Each point is 20 bucks. So now, it's going, when I'm watching this, I usually use points because money typically has an emotion for people. Those are ticks. Okay, these are points. So if you see a dollar amount, you might react a little bit differently. But, if you're using points, so like this morning, I caught in 3 minutes, 70 some points, 71 point move. It actually dropped 100 points. And 71 points. So one contract is 20 bucks. That was like $1,400 for one contract. And I had a few contracts on there. So you can actually catch nice moves. There's 5 points there. And you can also watch the dollar amount. If you add more, obviously, but I just want to show you guys how this moves. If I'm going short, obviously I'm going to do the sell side. I'm going long, it's going to be, the buy side. And I am showing that to you guys only because, look at that. That's why we have stop losses, because, this stuff can move pretty wildly, especially if you're trading NQ or MNQ. ES is not as volatile. So a lot of times people will start trading ES. A lot of times they also move together, NASDAQ and S&P 500. I prefer NASDAQ only because, it tracks 100 companies, the tech companies. And I also watch the, tech companies as I'm trading this: Microsoft, NVIDIA, Apple, Amazon, all of that kind of stuff. Okay. So here, I'm just going to close this. Now I'm going to go over to ES. This one moves $50 per point, but it's not as volatile and doesn't move as many points as NQ. So let's say I want to go short. Okay, these are points. So notice how it moves in quarters. Okay, so each $1 move is a point, and each quarter move is a tick. Okay, so that's how you know the difference. And then 1 point is $50. So if you go here, see, I'm almost down 50 bucks, or maybe not. So that's kind of how it moves. I mean, it's pretty simple. It's straightforward. There isn't anything, else that you have to kind of think about. You do want to change your stop losses according to what you're trading, because a 10-point stop loss on ES is a lot different than a 10-point stop loss on NQ. Also, the 10-point stop loss that I use for NQ is pretty tight for most people, and most don't use it. So that said, let me go back to, whoops, yes, I got outdated drivers, I know. Here, let me go back to another thing. When you're trading futures, you want to go and check news feeds, okay? We watch news all the time. In the morning, I always start with Varchart or Benzinga, and then Financial Juice kind of gives it throughout the days, just short little, it delivers like breaking market news and updates or economic data, that kind of a thing. You also want to check the trading economic calendar, okay? So like today we had Powell speaking at 12:20. So if we have, let's say, FOMC or CPI, some firms will not let you trade during the news. I personally don't like to trade during the data, especially if it's like a red folder or whatever, just because it, obviously can go up or down. Oh, it's not what I wanted to do. Also earnings, when we have like Microsoft or NVIDIA. Holy shoot. Oh man, you guys, we are like, check this out. If I had a position, okay, so see how, now you guys have seen how fast NQ moves, almost. Okay, it came down to almost 810. When I first logged into it, it was 900. So 90 points. Oh, there's 100 points, okay? How much for one contract would have that been in less than a minute? Or even more, look at that. It's $20 for each dollar. Whoa, what are we doing? No. So that 1 minute would have been $2,000. Actually, even more, because we are going more. So no, let's say you didn't have a stop loss and you only had a $2,000 account. There goes your account in real time. So, all right. Well, I'm done yapping, you guys, but I will do some giveaways, and I will ask a question, like a trivia question. Yeah, I can't listen to the Squawker. I have the Benzinga one, and I don't listen to that. So, okay, let me go to my little stream stuff, and then I'll ask a question so that you guys, I'm gonna do a giveaway in Discord and then a giveaway on Twitter. If I can only find you guys. I have TradeSync. TradeSync is not. Hang on. Oh, TradeSync journal? Is that what you're asking? Or the TradeSyncer trade copier? I think there's a trade copier called TradeSyncer. The copier that I use is called Affordable Indicators. I don't actually have it posted here. I should probably add that. I've tried many of them, and they don't work very well, and I've lost 6 figures multiple times. Yeah, so the one that has fixed that issue of like ghost orders is Affordable Indicators. They just fixed that like a few weeks ago, which no one in the industry has been like able to fix. So I'll actually add that in here somewhere so you guys can have. Also, there's more, trading knowledge base and stuff like that. A lot of information in here, guys. I thought you were asking me about the journal because, yeah, this journal here is free. And then there's like a premium one that's also free. Okay, let me see. What shall I ask? You guys got to be fast with your answers because the first one to answer is who's going to win. Let's see. Gonna give away 2 accounts, 2 prop firm accounts, one for Twitter, one for Discord, and then I will give away 2 free subs, 30-day free to TWL. Okay, let's see. How many different drawdowns are there? Yeah. Okay, Raska, you got that one. Okay, let's see. All right, Joker on Twitter. Yep, you're right. Okay, so you 2 DM me. For the free account. For the free accounts. And for the free sub, we live trade all day on VC. And we catch nice moves. Like this morning, we caught the downside and the upside. The boys caught the upside. I actually only trade usually the first hour or so. Okay. Next question. How many different assets are there? Nope. How many assets are there? In futures contract. So futures contracts is available on how many assets? I went over it. Joker, are you the only guy on Twitter, or is there anybody else on there? I don't see anybody else. No, I'm not done with giveaways, but you don't get to participate in this this one. Hold on. Where the heck is my to participate in this There's no stage fright, guys. Come on, just give me a damn number. It's not that. It's not that. Raska, you're done. No. It's okay if you guys don't know. Just give me the number. Keep guessing. I'll tell it to you guys, but I still want to give away at least. Jesus Christ. So the question again is, futures contracts are available in how many different assets? Yes, Cheeseburger, you won last time. Last week, yeah. Cheeseburger. Nope. While I'm waiting for that, guys, this website called propfirmtrend.com is completely free. Nothing, there's no paywall, there's nothing. It's always going to be free. It's there to utilize a lot of, the trading resources, the calculators, to help you guys compare, and trading journal, all of that. No guesses? Mark it easy. Try again. Okay, you try it, Bart. I went over it. If I was in the audience by now, I would have known the answer. I would have just pulled up the, futures trading basics and figured it out. No, not 300. Pick between 1 and 10. Oh, no, not 1. All right, Ahmed. That's it. DM me for a free Discord. Roll it. Let's see in Discord. Did you guys get it? Yes, mark it easy. 5. Okay. Futures contracts are available in 5 different assets. That's equity interest, index futures, interest, commodity, currency, and metal. Like, Raska, I can't let you take all the wins. Sorry. Gotta leave some for somebody else. Because. All right, guys. Well, I hope this was helpful. And if you guys decide to trade, be careful out there. Jesus, I cannot believe we dropped. You guys, okay, as we're watching this, we literally. And I was in a short, okay? It's a stupid sim account. But look, we were 900 points. We came down to. How much did we fucking drop? What's this number? Whoops, hang on. $685? Did we really drop down to $685? 215 points? Hang on. No, we were at 800, weren't we? No, we were at 900. What the frick? Okay, so 215 points times that by 20 bucks, that's $4,300 in this if I just like left the short on with one contract. But anyway, it do be like that, you guys. That's why you gotta be careful, because this stuff moves fast, and Oh, it's a Trump thing. Yes, cheeseburger. All right, guys. Well, I hope you guys have a great day. If you want something, please DM me and enjoy the rest of your day. Adios. Ciao, ciao. Nah, we got MOC, Joker, right now. MOC is about to come through at 350. There's the candle. There's 350. Don't be talking about London. We in America, bro. We run this shit. All right.